we are going to look at the history and the revolution of money. Then we are going to have introduction to blockchain and the crypto, understanding what is Bitcoin and the Satoshi value. Then we look at merits and demerits of crypto. And lastly, we're also going to look at misconception and myths about cryptocurrency. Just to start it off, we look at the history and evolution of money. So we are all familiar with how money has evolved over time. In the beginning, or rather in the olden times, we had the barter trade, where this involved the exchange of goods and services. You have beans, I have a cow, we can exchange for that. So that was the first evolution of money, where we had the barter trade. Then after the barter trade, just to move to this other slide, after the barter trade, we moved to something what we call the cowries. The cowries are the small shells used as currency in the ancient times. Those coins that had a hole there in the inside. So those are what we call the cowries. Then after the cowries, money, or rather finances, evolved into something we call the coins and the paper money. Coins is whatever we are having right now. And paper money, the 100 shilling note, the 1,000 shilling note, the 5,000 shilling note, that is what we call paper money. What is the largest denomination in Kenya? The largest note, or rather the largest paper denomination in Kenya, which is the largest note you can get in Kenya. Largest note denomination. Largest, is it denomination or domination? Whatever. Let's have, whose hand is up? Okay, Joseph Kure, your hand is up. You can unmute yourself. Let's hear you.
Oh, the largest note is 1,000.
Yes. The largest denomination or domination in Kenya is 1,000 Kenya shillings. So I have another question. If the government of Kenya deploys a 10,000 shilling note, will it be a good thing or a bad thing to our economy? Instead of having the 1,000 Kenya shilling note as the largest denomination, and in this case we have 10,000 shilling note. Will this be a good thing or a bad thing to our economy? Someone? Let's have a hands up. Jamal, let's go.
Yeah, thank you. I think it will be a very, very bad thing.
Why do you think so? Why?
I think it will lead to inflation.
Yes, let's give Jamal some reaction. Let's congratulate him from the emojis, kindly. Great. So I'm actually doing this, or rather telling you, engaging you people so that I can see if you guys are listening. But anyway, yes, that's very correct. So if you have 10,000 Kenya shillings, it means, in short, what it does, it means that our currency is losing value. If you look at at US, their highest, or let me ask you as a question, which is the highest note domination for the US dollar? The highest note domination for the US dollar. Someone? Stop answering in the chat. I actually want to hear your voices. Let's see here. Okari?
$100.
Yes, $100. Yes, so the largest denomination, or rather domination for the US dollar note is 100 USDT. So, but rather, going back to what I was saying, if you have the 10,000 Kenya shilling note, it means our currency is losing value. So, in short, it will be a bad thing. But rather, that is what we were talking about, the coins and the paper money. After the coins and the paper money, what we had next was, let me admit some people. What we had next is what we call the credit cards or the plastic money. These are what we call the MasterCards, the ATM, all those. That is what we could classify them under the credit cards or the plastic money. And they introduced a new way to pay goods and services without carrying cash, or rather the coins. So after that, after the cards, or what we call the plastic money, we move to what we call the electronic money. Electronic money is things like, can you have people giving us examples of electronic money system that they've used before? I'll start. M-Pesa. Someone else? Let's have Collins. Let's go.
PayPal.
PayPal. That's correct. Someone else? Someone else? PayPal. M-Pesa. Let's have someone else giving it a trial. Joseph.
PesaPay.
PesaPay. Yes.
Payless.
Pardon?
Payless.
Pardon?
I said payless.
Yeah, Payless. Another one. Let's go. In short, we have a lot of electronic money system. We have M-Pesa, PayPal, Pioneer. We have Wise Bank, Skrill, all those. So those are examples of electronic money system. Then the last, or rather, the latest evolution of money is cryptocurrency. Cryptocurrency is the latest evolution in the transaction process, offering digital and decentralized form of currency. Someone tell us what's the meaning of decentralized. Give it a guess. What's the meaning of decentralized? Meaning of decentralized, someone? Ivy? Ivy, what's the meaning of decentralized? You can see your hand is up.
Division
Pardon?
is the division of power in case of in terms of governance.
In terms of governance, you're on the right track, but not quite there. Thank you for that trial. Let's have someone with a different opinion. Collins, let's go.
I think decentralized form of currency means that all the currencies in the world are just placed in one place.
Please, I can feel you know where you're headed with this explanation, but you're not getting it quite well. But thank you for that trial. Last trial before I tell you, Joseph Kuria.
Okay, decentralized currency is the currency that is not controlled by the government.
Exactly. Let's give Kuria some thumbs up. Only Martin. Oh, okay, yeah, great. Can see that. So yes, Joseph Kuria has just explained it quite well. So when we say decentralized, we mean that when we say cryptocurrency is decentralized, we mean that it is not controlled by the government. Remember, these other forms of money, we call them fiat currencies. Fiat currencies, let me just define them right now. Fiat currencies are currencies that are controlled by the government. Kenya shilling is an example of fiat currency. The US dollar is an example of fiat currency. Kuwait dollar is also an example of fiat currency. Tanzania and whatever they call their money is also controlled by the government. So when we talk about fiat currency, they are centralized. Centralized to mean that they are controlled by someone. So for example, if you come to M-Pesa, M-Pesa is a centralized form of electronic money. Why? Because it is owned by people that we know, like M-Pesa. They have support, they have offices. That is what we mean by centralized form of money. But when it comes to cryptocurrency, it is decentralized. It is not owned by anyone. It is not controlled by anyone. Rather, it runs on the blockchain. But don't worry, we look into that much later. So let's move to a brief explanation of M-Pesa. So M-Pesa was launched in March 2007 in Kenya, and it revolutionized how transactions are conducted. So in short, I don't know anyone who is in this call who doesn't use M-Pesa. If you don't use M-Pesa, thumbs up. If you don't use M-Pesa, aye, we wacha. That's a lie. If you don't use M-Pesa, thumbs up. Exactly. So it revolutionized how we conduct transactions in Kenya, and everyone. I highly think that everyone is surviving, or rather, uses M-Pesa on a daily. But these are just examples of to mention. We have M-Pesa, Western Union, Skrill, Paper. Those are just basically examples of electronic money. Having done that, let's now introduce ourselves to what is cryptocurrency. So advances, like we said, we've moved from barter trade all the way to cowries, all the way to paper money, electronic money, plastic money. Then we've moved to currencies. So let's get to understand what cryptocurrencies are. For us to understand what cryptocurrency is, we need first to understand blockchain technology. Because remember, I said cryptocurrency is decentralized. It is not owned by anyone. It is not controlled by anyone. So for us to understand what is cryptocurrency, we need to understand what is this technology that we call blockchain technology. Rather, other people call it the Web 3.0, Web 3. So in traditional banking, all transactions are recorded in a database that can be retrieved at any given time. For example, if I send you money right now from M-Pesa, and I need an evidence to show that I did send you money, I can go to the support of M-Pesa, or rather from my phone, I can access the M-Pesa statement. So that's what we are saying. They're recorded in a database that can be retrieved any time. But when we talk about cryptocurrency, because we're saying that it is not centralized, so we don't have a recorded database, but it is the same thing. We also have a place where all these things are kept. So when you want to get the history of where you sent your money, you can also retrieve it using when you're using cryptocurrencies. But in this case, they are recorded in a ledger. And this ledger is now what you call the blockchain technology. So what is blockchain? Blockchain is derived from two words. We have the block, which refers to digital information, and the chain, which refers to public database. And when we say public, we mean that it is public. Everyone. You see the way when you go to M-Pesa, if I ask for an M-Pesa statement, they ask for my PIN number. So it means that only me, Wanjiku, can access my history, or rather my M-Pesa summary. But when it comes to crypto, it is an open source kind of technology. No wonder we're saying chain to mean public database. Public database. As long as I have the hash, we look at something what we call hash ID. As long as I have the hash ID of a certain transaction, I can always go to the blockchain and confirm if that transaction was done. It doesn't matter if it was Joseph or Carrie who did that, Collins or anyone. I have the access. There's no password. I have the access to the blockchain. So what is cryptography's role in blockchain? Remember, we said cryptocurrency is not managed by anyone. So the security of M-Pesa, I'll keep on going back to M-Pesa because that is what you're familiar with. The security of M-Pesa is solely based on the people who created it. They came up with things like password. They came up with things like two-factor authentication. They came up with things like, if you do this, they'll ask you for your ID number so that they can actually confirm your identity. They can ask for your face. All those is done by the support of Safaricom, or rather the people who created M-Pesa. But in cryptocurrency, remember, it's open. It's open source. It's decentralized, meaning it's not controlled by anyone. So what ensures security in crypto? This is what we call cryptography. It uses a technology called cryptography to ensure security of the system. And no wonder we are saying here that cryptography is crucial in blockchain technology. Why? Because crypto Cryo, we can separate cryptography as two words, cryo and graphy. Cryo means hidden or a vault, and graphy means writing. Therefore, we can say cryptography can be defined as a secure information and communication techniques derived from mathematical concepts and algorithms that transform messages in ways that are difficult to decipher. I won't dive deep into this part right here about cryptography. Just for the purpose of this class, just understand that the security of the blockchain technology is done using a technology called cryptography. But if you want to dive deep into that, I have a whole series on this website right here where you can look into how Web3 works. If you come to the website right here, we have crypto education, leave alone the cryptocurrency course, but this is where I'll be posting the video of the classes. But if you want to dive deep into understanding how the blockchain works, you can come here and you can access all the classes from this. You can understand what is Web3, prerequisites of blockchain, who should take whatever, what is blockchain, understanding the hash, miners and nodes, understanding cryptography. There's a whole lot series about that. From this part right here, you can now get to understand how this cryptography works in a decentralized manner. Any question before we move to the next part? Any question? Any question? If someone asks you to define what is cryptocurrency, can you actually give an explanation of what cryptocurrency is? If someone asks you to define, thumbs up if you can comfortably now explain what cryptocurrency and how it works. Only Okari? Okay, perfect. So let's dive now into the serious business of this class. So what is cryptocurrency? In short, like we've said before, it is digital money. It is digital money existing in a purely digital form, opposite to what fiat currency or paper money is. What did you say fiat currencies are? Someone? Fiat currencies, I explained it just a few minutes ago. What is fiat currency? Martina, let's go. Unmute yourself.
These are currencies that are controlled by the government.
Yes, perfect. Let's appreciate Martina. Yes, great. So these are currencies that are controlled by the government. And you can see from this list right here, we have examples of the fiat currencies. I have a question right here. Which is the strongest currency in the world? Someone, strongest currency in the world. Strongest currency in the world before you even move to something else. Let's have backup 2. Let's go.
Is it Kuwait?
Yes, let's appreciate backup 2. What's your name? Backup 2. Ama we go with backup 2.
Edwin.
Edwin, let's appreciate Edwin. Yes, the Kuwait, I think I have it somewhere here. I must have missed it. Yes, the Kuwait dinar is the strongest currency globally, but cryptocurrencies aim to create a more unfilled financial system. That is just beside the point. So back to what we are saying, cryptocurrency is digital money existing in pure digital form, opposite to how fiat currencies exist. So cryptocurrencies also can be used for online payments and transaction for goods and services. Anyone who has ever bought something online using crypto? Anything? Maybe it's paying for VPNs, buying things online, paying for proxies. Anyone who has ever interacted with that? Dark? If you wish to share, you can unmute yourself and tell us what you used Bitcoin to buy from the online space. Dak, your hand is up. Okay, let's have Paul. If you care to share. Okay, it's okay. So you can use cryptocurrencies to buy or to pay for online goods and services. Currently, there are over 10,000 different cryptocurrencies in existence, each offering unique features and uses. I have a question. Where do you think we get to know the use case of a coin, or rather a cryptocurrency? From what place do we get to get this? Someone? Peter Jenga? Peter, your hand was up. Dak? Okay, Joseph Okari?
CoinMarketCap.
Yes, from CoinMarketCap. That's correct. But remember, CoinMarketCap, CoinMarketCap is a crypto aggregator. But what I wanted to get, you are correct. You can go to the crypto aggregator, or rather CoinGate, but to get the use case of a cryptocurrency. Joseph, you can mute yourself. To get the use case of a coin, what you do after you've accessed your favorite crypto aggregators, don't worry, you will get to learn about all the crypto aggregators. We have CoinMarketCap, CoinGecko, all those. So when you get to CoinMarketCap, you come to this thing that you call the white paper. The white paper, just to define it, is an official document that outlines, even if you click here, you'll see it's giving a summary of what Bitcoin was created to do. Just to define it, is an official document that outlines the purpose, the technology, and the mechanics of a crypto project, so that people get insight into the project's vision and potential. And we are saying we have over 10,000 different cryptocurrencies. If I'm to go back to this part right here, you can see if I go back like this, let me just navigate to CoinMarketCap and go to cryptocurrencies. From this part right here, is this part visible? Thumbs up if you can see this part right here. Yes, you can see from this part right here, we have over 12.48 million cryptocurrencies. I'm very sure a lot of guys only know of Bitcoin, so people will confuse Bitcoin for cryptocurrency, but Bitcoin is only one of the many types of cryptocurrencies, and it happens to be the king of all cryptocurrencies. But if I'm to scroll down right here, you'll see we have quite a number of cryptocurrencies, not only Bitcoin, quite a number, over 10,000. From this part, from my notes, you've seen it's over 10,000, but the real figures are we have over 12.48 million types of cryptocurrencies, and they solve different issues. But don't worry, we'll look at different types of cryptocurrencies tomorrow. So this overview, what we've just covered, serves as an introduction to the world of cryptocurrency and blockchain technology. So as we move forward, we'll dive deeper into the specifics of blockchain types, how cryptocurrencies work, and the future of digital money. Just to move to this part right here, we've looked at that part. So let's understand the king. Before we even dive into all different types of cryptocurrencies, like we've seen, we have over 12.4 million cryptocurrencies. We need to understand what is Bitcoin, because it serves as the king. Remember, it's the largest cryptocurrency. So Bitcoin, like any other cryptocurrencies, is an electronic asset based on mathematical proof. Unlike the traditional currencies, Bitcoin operates independently from any central authority, what we basically named as decentralized. Bitcoin is decentralized. Cryptocurrencies are decentralized, so they do not operate from any central authority, rather they are independent of any central authority. And for that issue, they allow instant transfers and relatively low fees. So what is Bitcoin and where did it come from? The birth of Bitcoin, or rather the white paper. What did we say a white paper is? We said a white paper is an official document that outlines the purpose, the technology, and the mechanics of a crypto project, so that people get insight into the project's vision and its potential. So the Bitcoin white paper was released in 2008 by an individual, or rather a group of software developers, under the pseudonym Satoshi Nakamoto. No wonder we are saying it might be been an individual or a group of people, but since they are anonymous, we don't know. But they went under the pseudonym Satoshi Nakamoto. Up to this day, the identity of Satoshi Nakamoto remains unknown, but there was a documentary, I think last year around September or November, I don't know, but I'll send it, that the HBO released, that they had found who Satoshi Nakamoto was. I'll send that so that you guys can go and watch, and you'll give us feedback. Actually, I'll give that as an assignment. Go and watch that documentary and get to understand the whole idea about Bitcoin. So although Satoshi Nakamoto claimed to be a man living in Japan, most speculation points to experts living in the United States or Europe. If you watch that documentary, you'll get to understand. I'll send it immediately after class. I'm going to send it. So what was the vision behind Bitcoin? The vision behind Bitcoin was to create a currency that operates independently of any central authority and that can be transferred globally with minimal turnaround time. What do you mean by turnaround time? So if I was to send you 2 million Kenya shilling right now into your bank, I'm very sure most banks won't allow you to withdraw it. They'll ask for purpose of payment. Where did this money come from? What were you paid for? What services do you offer for you to be paid 2 million right now? But when it comes to crypto, I can even send you 1 billion right now and no one will ask you. Remember, we have the blockchain technology running this, so it is independent on any central authority. So basically, the whole idea of Bitcoin was to create a decentralized form of money. So how do Bitcoins come about? So Bitcoins are not printed like fiat currencies. Someone, I have a question. How many 1,000 Kenyan shilling notes do we have in existence, in circulation? How many 1,000 Kenyan shillings do we have in circulation? Someone? How many 1,000 Kenyan shillings do we have in circulation? Joseph Okari?
Unlimited.
Eh?
Unlimited.
Let's appreciate Joseph. Yes, it's unlimited number of 1,000 Kenya shillings. Also, I have another question to get to understand the advantage of Bitcoin. Joseph, you can unmute yourself. The advantages of Bitcoin. What is the maximum amount of money you can be allowed to carry when you're traveling outside Kenya? So you are there at JKIA, how much money can they allow you to carry in cash? In cash. Remember, I'm saying in cash. How much money can they allow you to carry in cash? Esther?
10,000 USD.
Yes, let's appreciate Esther. 10,000. Let's appreciate Esther. Great. Yes, 10,000 USD. That is the cap amount of money you can carry outside Kenya in cash. But when it comes to Bitcoin, you can carry whatever Bitcoin. what you need to carry Bitcoin is only a wallet. We're going to look at wallet, either a cold wallet, a hot wallet, or decentralized bodies like Binance. With that, you can carry up to $1 billion, and literally no one will know that you're carrying that amount of money. But anyway, Bitcoins are not printed like traditional fiat currencies. As digital assets, they cannot be physically issued. So if someone comes to you with something like this, they are telling you, "Ati, this is Bitcoin. Give me 80." How much is one Bitcoin right now? I think 80 something, 81K, 82. So they are telling you, "Give me $82,000. I give you Bitcoin in paper form, like this part right here, or rather in coin form." Know that they intend to scam you. They cannot be printed. They are not tangibly offered, so they cannot physically be used. And anyone claiming to offer tangible Bitcoin is likely, not even likely, is attempting to scam you. Like you said, in Kenya shillings, the number of 1,000 Kenya shillings circulating in the market is unlimited supply of Bitcoin, unlimited supply of fiat currency. But the total number of Bitcoin is capped at 21 million coins. Only 21 million coins. So a finite number that distinguishes it from fiat currency. And this is why Bitcoin keeps increasing in price over time. Someone tell us, when Bitcoin was launched in 2009, how much was one Bitcoin at that time? Someone can Google. Someone? In 2009? Okay, I'll give you the answer so that you can save on time. It was 0.01 USD. 0.01 is like 10 shilling, 10 Kenya shillings. Yes, 10 Kenya shillings. So it was that amount of money. But the reason why Bitcoin keeps on increasing in price is because its supply, or rather total supply, is capped at 21 million coins. And so far, let me move to this part, but don't worry about this, we'll talk about them. But just to mention it, so far, the number of cryptocurrencies that have already been supplied to the market is how much? 19.83 million Bitcoin. So if you don't have a Bitcoin, just know that 19, 20, 21, 2, only 2 million Bitcoins are remaining to be released in the market and to be owned. So far, 19.83 million Bitcoins are already in existence in the market. Only the difference between remember the maximum amount that can exist 21, and already 19 has been released. So only 2 million Bitcoins are remaining in the market. So with that, you can easily know that in years to come, about 20 years, one Bitcoin will likely be $1 million. So the high time to buy Bitcoin, you missed to buy yesterday, the next best time to buy Bitcoin is today. But anyway, Bitcoins are introduced into the economy through a process called mining. Do not worry, we have a whole topic, or rather a whole class, discussing mining. This process ensures that new Bitcoins are released periodically. They don't get released once, but there's a cap number that is released daily in the market. So this process ensures that new Bitcoins are released periodically, maintaining a steady flow of currency into circulation. However, of the 21 million Bitcoins, some are already owned, while others have been lost forever due to forgotten passwords or lost hardware wallets or the death of an asset owner. We look at how people get to lose Bitcoin and how you can secure yourself not to lose them. Moving to this part right here, further discussing Bitcoin, we are saying that Bitcoin is an example of deflationary currency. And when we say Bitcoin is deflationary, we mean that its buying power increases with time. So when it launched, it's maybe at that time what it could afford is basically maybe an apple. But right now, owning a Bitcoin, the current market price of Bitcoin is 82K. 82K is roughly, let's say if we assume, I know right now the current rate is 130 for a dollar in Kenya shillings, but let's use 100 for easy maths. So if you're saying Bitcoin is 82,000 Kenya shillings, then $82,000, then it means in Kenya shilling that is around 10 million Kenya shillings. So with 10 million Kenya shillings right now for one Bitcoin, it means now you can be able to buy even your dream car. But years back, the only thing Bitcoin could have bought is maybe an apple. But when you look at our money, it is inflationary, meaning its buying power loses its purchasing power. It loses its purchasing power with time. The 10 shilling bob that you once used to buy an egg, right now you cannot use the same amount to buy an egg. An egg is now 15 shillings, if I'm not wrong. 15 shillings. So in comparison to fiat currency, Bitcoin is deflationary, but fiat currencies are inflationary. Inflationary to mean that their purchasing power decreases with time. And if you can see from this example right here, from this picture right here, you can see in 2002, this is an explanation of fiat currency. We have a $20, let's say 20 Kenya shillings. Let's assume this 20 Kenya shillings. In 2002, 20 Kenya shillings could have bought a lot of things, but over time it has lost its value almost to nothing in the current market space that you are in. But when it comes to Bitcoin, in 2012, one Bitcoin could have bought you maybe an apple, but right now one Bitcoin can actually buy you your dream car. That's why you're saying Bitcoin is deflationary. Just to give the last part about this, we are having the first ever transaction that was made using Bitcoin. And this first ever transaction that was used, it was used to purchase 2 pizza. The cost of those 2 pizza at that time, I'm very sure this person regrets up to today. He bought 2 pizzas for 10,000 Bitcoins. On which day? 22nd of May, 2010. Not far. Not many years ago. 2010 is just like 15 years ago. On that day, he bought 2 pizzas with 10,000 BTC. The value of those BTC, the 10,000 BTC was $40. In Kenya shilling, that's around 5,000 Kenya shilling. So in 2010, on May 22nd, 5,000 Kenya shillings was used to buy 2 pizza. But right now, if with the current market price, from my notes right now we're having 95K, but with the current market price, which is J3, the value of the same amount of Bitcoin that was used to buy 2 pizza is $950 million, nearly $1 billion. Can you imagine that? I'm very sure he's somewhere regretting that. From this part, you can see the memes, his friends consulting him after refusing to hold Bitcoin and using it to buy pizza. But anyway, that's beside the point. Lastly, we have something we call the countries that have officially adopted Bitcoin. The 2 countries that have officially adopted crypto is the El Salvador and the CAR, the Central African Republic. Any question before we move to the next part? Any question? Any question? If no question, kindly put a thumbs up so I can continue. If no question, thumbs up. Great. Remember, Samuel, have a question? Samuel, your hand is up. Okay, I'll assume that was a mistake. Let's move to Satoshi Nakamoto. We have said, remember, Satoshi Nakamoto is the person who is believed, or the pseudonym who is behind the Bitcoin white paper, or rather the blockchain technology. And anonymous. This is just basically to show you the statues that have been placed in different parts of the world to honor Satoshi Nakamoto. And if you can see from this, we don't have a figuratively face. Even from this part, we don't have a figuratively face because we all don't know who Satoshi Nakamoto is. But the first statue is located in Graphisoft Park in Budapest. And it was unveiled in September 2021. These are just, by the way, so that if someone mentions it, don't feel that you don't know anything. But also we have in October, another Satoshi Nakamoto statue was unveiled in Lugalo, Switzerland, a city that is known for a strong embrace of Bitcoin and the crypto innovation. So these are the two statues that have been raised to honor Satoshi Nakamoto in different parts of the world. So let's look into the last parts of this class before we end it. Number one, we have the features. We're going to look at the features, the advantages, disadvantages, and lastly, we're going to look at the myths of myths and misconception about cryptocurrencies. As the world continues to embrace digital transformation, cryptocurrencies have emerged as a revolutionary force in the financial landscape. So in this class, we're going to look at the features, advantages, just like I mentioned. Let's start with the features of cryptocurrencies. Number one, you have said decentralization. I think I've mentioned decentralization a number of times, so this is basically self-explained. It means that it is only powered by the blockchain technology and no single entity, not even the government, has control over cryptocurrencies. Point number two, features, is a digital asset. They solely exist in digital form. So they eliminate the existence or rather the need of physical money or intermediaries like bank. Remember, bank are central authorities that control money. So if we remove the central authority, which is the bank, and replace it with blockchain technology, then we have what we call cryptocurrencies. Number three, security. You have said for security to occur in the blockchain technology, it deploys a technology that we call the cryptography. And I've said, just like it mentioned, if we want to understand more about cryptography and how the Web3 or rather the blockchain works, we have a whole series of that on our website under the crypto education, blockchain or Web3 course. From that part, you can access that from that part. But for now, for the purpose of this class, just know that for security, the blockchain technologies deploys a technology called the cryptography. Number three, have transparency. Remember, cryptocurrencies are, like I mentioned, they are open source. They run on the blockchain technology. So if I can access a hash ID of a certain transaction, then it means I'll be able to see how the transactions were made. But it maintains anonymity. There's nowhere they'll ask you for your identity. I don't need to know your identity or your name. The way when you're sending money, you keep on asking someone, italeta jina gani, whatever, to make sure that the money goes there. In crypto, as long as that I know your address, or rather, if you give me access to your address to send you maybe USDT, I don't need to know who you are, but the money will come to you. So it maintains that anonymity, but at the same time, it is very open source. Anyone in the world can see the transaction that has been made. We have the other part is anonymity and pseudonymity. Just like I said, while transactions are visible, they're open source, the identities of those involved are represented by a cryptographic address. We are going to look at addresses, don't you worry. We look, but I'm very sure many of you guys have interacted with cryptocurrency addresses. Then global accessibility, same thing. I don't need to open a bank in the US for me to get money. I don't need to use Western Union to receive money. What I need is cryptocurrencies from any part of this world. As long as you have someone's address, they can send you Bitcoin, they can send you Ethereum, Solana, Monero, all those, they can send you all that. Then 24/7 availability. This is not like the forex market where over the weekend they are closed, but in crypto we say it is continuous something. I've forgotten that word, meaning that it operates 24/7. In the middle of the night, I can wake up, send someone money. The markets are running 24/7. Then you have lower transaction fee. For example, if I want to send you $1 million, I'm very sure the transaction cost that I'll use to transfer that money to your bank account is very hefty. But in cryptocurrency, some networks are really cheap. Some networks like the Tron network, the BEP20, don't you worry, we're going to look at that. The BEP20 network, all those, they are relatively fair in comparison to the fiat currencies transaction fees. Advantages of cryptocurrency, basically is also the same thing. Decentralization, they are not controlled by anyone. Ease of setup. When setting up a cryptocurrency, I'm very sure when you are going to open a bank account, they ask you for your ID, they ask you for your names, fingerprint, all that. But when you're setting up a cryptocurrency wallet, it's very quick and straightforward. We look at that tomorrow, not tomorrow, but the other day, on Thursday. We're going to look at Trust Wallet. You'll notice that it takes you literally almost 10 seconds to open up a cryptocurrency wallet. So it's easy of setup, ease of setup. Then the next part is anonymity. Cryptocurrencies transactions are private, with no one knowing how much is entering or leaving your wallet. No one can know unless you give someone the hash ID of your transaction. That's the only way they'll get to to see the amount that is entering into your wallet. But without them knowing that, even billions can be transacted through your wallet and no one will know. Because remember, we are not controlled by anyone. When we don't submit our names into the blockchain so that when money enters there, they know that Wanjiku has received this money. But basically what you're given is what? A cryptographic address. So people might see this wallet has billions of money, but they'll never know who owns it because there's no name. There's anonymity and pseudonymity. Lastly, we have transparency, where the transactions are public, the identities behind them remain hidden, ensuring it ensures privacy, but without sacrificing transparency. So it's very open source, but you'll never know who is behind a certain wallet. Other advantages are low transaction fees. I think I've mentioned that. The speed, I have mentioned that. The portability, like we had mentioned before, that the only amount you can carry overseas at JKIA is only 10,000 Kenya shillings. But with Bitcoin, you can carry $1 billion, but no one will know, because all you need is what? A hot wallet or a cold wallet for you to carry such amount of money. Portability, same thing. It's only you buy a wallet. Permanent transaction. So once at crypto, remember this is decentralized, so there's no support at ukituma vibaya now you can ask for a reversal. No, if someone has sent you an address, it happens to be a wrong one, and you send that money is lost forever. So once cryptocurrency transaction is made, it cannot be reversed, providing security against chargebacks or people who like to reverse using the traditional payment system. Then digital ownership and scarcity. Cryptocurrencies that like Bitcoin have a fixed supply. How much? What did we say the maximum supply of Bitcoin is? Someone? We've just done that right now. Maximum supply of Bitcoin. Maximum supply of Bitcoin. Let's have a different person. Let's see who. Martina, let's go. Unmute yourself. Martina, let's go.
21 million.
Yes, let's appreciate her. 21 million. Let's appreciate her. And how many did you say are already been released into the market? How many? How many? Rita, let's go.
19.
Yes, around 19 million of them. So let's appreciate her kindly. Let's appreciate Rita. Perfect. So digital ownership and scarcity. So with that explanation of the maximum supply, that part has been explained. So we go to the second last part of this class: disadvantages of cryptocurrency. I won't say that word. The transactions that are made on crypto are irreversible. So once you've sent money, or rather not money, once you've sent crypto, just know if you've missed, or rather if you sent to a wrong address, that money cannot be undone, or rather cannot be reversed. Then we have what we call market volatility. Volatility, when we say market volatility, we mean that the price of cryptocurrencies move really fast. Today we might sleep a coin like just me at 0.05. Tomorrow it might dump to 0.12. The other day it might pump to 0.75. all that. So that is what we call market volatility. That's the disadvantage. Cryptocurrency are known for their extreme price volatility with values fluctuating rapidly. Regulatory uncertainty. For example, in Kenya, crypto is not illegal. I repeat that crypto is not illegal, but rather it is unregulated. The government does not recognize crypto into our market. So I repeat that it's not illegal, but rather unregulated. So the regulatory landscape for cryptocurrencies varies widely across different jurisdictions, leading to potential legal challenges. Then you have limited acceptance. Many local businesses may not accept cryptocurrencies due to lack of understanding. It's not that they don't want this thing. I'm very sure if they understood the value of crypto, they'll be accepting it as a mode of payment. So due to the lack of understanding, they do not accept cryptocurrencies, though this is gradually changing. Technical skill required. So using cryptocurrencies required a certain level of technical knowledge for you to understand how to send money, what is an address, what is a wallet. You need to understand that for you to be able to use cryptocurrency as a mode of payment, which can be a barrier for some people. So let's look at the myths and misconception about cryptocurrencies. Number one, crypto is illegal. I just mentioned that and said that crypto is not illegal, but rather unregulated. In 2005, the CBK, or rather the Central Bank of Kenya, released this notice informing Kenyans that BTC was unregulated. What do you mean by unregulated? Unregulated means that the government has put itself out off any transaction about cryptocurrency, meaning that if you want to invest in cryptocurrency, it's up to you. If you don't want to invest in cryptocurrencies, it's up to you. If you lose your cryptocurrencies, there's no law that governs that. So the way you can be scammed, go to the police and say, "Oh, I was scammed," and they can have a money trail on it from M-Pesa and whatever. In Kenya, if you lose your cryptocurrency or you're scammed through cryptocurrency, there's no law protecting you. But it is not illegal. It is just unregulated. Number two, it is a scam. While some fraudulent schemes have used the name of cryptocurrency, the technology itself is legitimate. Always do your due diligence before investing. So when we say that cryptocurrency is a scam, we are lying, but you can be scammed through cryptocurrency. Remember, you have so many loopholes. For example, it's very anonymous. A scammer can use that fact in their favor. It is anonymous. It is anonymity and pseudonymity. Also, on top of that, it is regulated in Kenya, so they know if they scam you through crypto, there's no law protecting you against them. So instead of saying crypto is a scam, say I was scammed through crypto. It is a fad. When we say a fad, we mean that Bitcoin or rather cryptocurrencies are a passing trend. But with time, we've seen it only started with Bitcoin. We went to Ethereum, we went to Solana, and now we have over 12.5 million cryptocurrencies in existence, meaning they're here to stay. They're not going anywhere. Bitcoin is the only cryptocurrency. I'm very sure many people knew that, or rather they know that Bitcoin is the only cryptocurrency, but as we have seen, we have over 12 million, and different cryptocurrency solves different problem in the world. For example, Bitcoin solves what? The centralization of the normal money, or rather what we call the fiat money. Then you have something we call the other misconception is it is cash for criminals. Well, some early association with crime. In fact, the earliest adopters of criminals, we all know that criminals are always ahead of all of us. Criminals are very smart. Criminals and scammers are always ahead of us. So the early adopters of cryptocurrencies were actually criminals. On a popular site that was called Silk Road, I'll also send a documentary on the same. You go and watch and see. So this was a popular platform on the dark web, which was called Silk Road, that majorly was dealing with it's something like Amazon, but now this was Amazon for criminals for transporting drugs, guns, slaves, all that, and they used to pay for those services using Bitcoin because they knew it is very anonymous. Like I can buy a gun and the government will never know who bought that gun, or I can transact my drugs and I'll get paid. The government will never know me because of the fact that cryptocurrency is anonymous or pseudonymity, like we've looked at in the previous slides. But that site was closed and the person was arrested. I can't remember the name of that person, but I'll send that document. The owner of Silk Road was arrested, and actually all the bitcoins that he earned while operating that site was confiscated by the FBI. And just to mention, FBI is also one of the most largest, or is amongst the largest or the biggest holders of Bitcoin. I think you've looked at this public announcement that was issued by CBK in Kenya. Then we have counterfeit risk. Cryptocurrencies are not counterfeit. This is a misconception due to the cryptographic processes that make them secure. If you take your time to go through whatever I've said to understand how cryptography works, then you'll get to know that crypto is not a counterfeit form of currency. It is very secure. Then you have something else we have another misconception that it is not secure. There are numerous ways to secure your cryptocurrency holdings, from hardware wallets, which is offline, to multi-signature transaction. Don't even sweat about this. We are going to look into that as time goes by. Then another misconception is that that cryptocurrency is complex. Complex to trade, complex to invest, complex to navigate, complex to understand the blockchain. No, it is not complex. It can be as straightforward as trading stocks with many platforms to help, just as Kenya Crypto Magazine, like we're offering this class right now. You'll notice with time that actually cryptocurrency is not that hard. Another misconception is I have missed an opportunity. So someone might think that because they did not cut the wagon when Bitcoin was maybe $100 and now it's almost 10 million Kenya shillings, or rather, not even almost, it is 10 million Kenya shillings. They might think that they've lost the wagon. But remember, Bitcoin is not only the existing cryptocurrency, and new coins keep on being created every day. Even if you look today, there are new coins that have been created, whatever. So you have not missed an opportunity. You can actually get coins to buy, or let me not call them coins. You can find a technology to invest in, and it will yield you high returns. Also, Bitcoin, you haven't missed Bitcoin. We are having 2 million. The scarcity of this coin, of Bitcoin, should inform you that you're still early. You're still an early adopter. We are having 19 million coins in existence in the market, and the cap is at 21 million Bitcoin. So the whole world is scrambling for the 2 million Bitcoins that are in circulation right now. What does that tell you? That the supply of Bitcoin is less than the demand. And what happens when those who did business, when supply of something is less than the demand, when the avocados are off season, what happens to their price? When avocados are off season, what happens to their price? Sam Altman? Okay, Sam Altman, let's go.
Yeah, when avocados are on high demand, I think their prices increases.
Yeah, when the supply is?
When the supply is, let me say, is the scarce, the price increases.
Exactly. Let's appreciate some. Yes, when the supply is low, rather lower than the demand, the price goes up. So no wonder I'm saying you're still not late. This Bitcoin over with time, 10 years, 20 years, we reach to around at a million US dollar. Anyway, the wagon has not left you. There is no missed opportunity. The best time to buy Bitcoin was 2009, but the next best time to buy Bitcoin is today. But anyway, anonymous transaction. When many believe all crypto transactions are anonymous, most are traceable to a certain exchange, especially on public blockchains like Bitcoin. Can someone tell us how you can get traced? Just a guess how, because they said the only thing you need to register on crypto, or rather a wallet, is just an address that you receive. They'll not ask you for your name, fingerprint, facial, whatever. They just ask you for your name. But how do you think a lot of guys get caught? Someone? How do you think a lot of guys get caught? A trial. This is the last thing we are doing right now. We end this meeting. A trial, someone? Has anyone registered an account with Binance? Joseph, let's go.
KYC.
Yes, KYC. But I don't want to, we look at that, but basically just to explain that, what happens is when you're using wallets, we have centralized wallets and decentralized wallets. So a centralized wallet is like Binance, or centralized exchange, Binance, Bybit, all those are owned by people. So exchanges like those that are owned by people, when you're registering on them, or rather when you're signing in or up, whatever, they'll ask you for your identity, either driver's license and ID. They'll ask you for your facials. They'll ask you for different things just to make sure they have your identity. So if you've stolen money and you want to convert that into Kenya shilling, you might end up needing an exchange, a centralized exchange like Binance. And in that case now, your details, or rather like what Joseph has called KYC, will be used to trace you. And with that, we've come to the end of our first class. Any question before we end this meeting? Any question, remarks, anything? Any question? Any question? Sam Altman. I think Sam Altman is the CEO of this failed exchange, FTX CEO. No. Sam I'm confusing. Sam Altman and Sam Bankman. Anyway, okay. Sam Bankman was the CEO of FTX. Any questions so far? Yes, Ian, I can see our meme coin part of crypto. Yes, don't worry, we are going to look at different types of cryptos. We have layer 1s, meme coins, layer 2s, AI coins, metaverse coins. You'll see, let me just to answer Ian. If you come to this part right here, if you go to cryptocurrencies and go to categories, you'll see we have different, let me go to categories like this. We have different types of cryptocurrencies. Meme coins, Solana ecosystem, Polkadot, BNB, made in America, AI, real world assets, gaming coins, DEPIN, all these are different types of cryptocurrencies. We look at that. Sam Altman, you have a question?
Yeah, thank you. So my first question is not even a question, I think it's a suggestion. In the next session, maybe you can talk about how the reservation of Bitcoins by US will affect the market, and then will you kindly share the slides after this? And then Sam Altman is the CEO of OpenAI and I think founder of WorldCoin.
Okay. To answer you, I don't feel there's a need to share the slides. This video will be posted on the website. You can always access that any time of the day, any time of the year. They'll be there. Also, you've talking about how how the US affects the crypto market. Don't worry, we have a separate class in week 3 maybe where we're going to talk about crypto fundamental analysis. So don't worry, it will be covered under that. Is that okay?
Yeah, that's fine.
Okay. If no further questions, let me check if there's someone who has texted a question right here. Can one be caught in crypto by tracking his or her IP address? No, it's anonymous. They might get your, yes, they might get, actually, let me send you that documentary of how the CEO, I forgotten the name, the CEO or rather the creator of Silk Road was caught, and it's something along those lines. I'm not a really cybersecurity person, so I don't know. I cannot answer if you can be tracked using IP address. I don't know. But if I send you that, maybe you'll understand better. Course outline, Joseph Joroge, I shared this in the group, course outline, but don't worry, before any class every morning, just like I did today, I'll be sending a slide of what, or rather a post of what will be covered in class during that day. But I've shared the whole course outline in the group, or rather I shared yesterday. Yeah, I see no other questions. So with that, I'll end this class at that point. I'll update in the group once the class has been posted on our website. Otherwise, guys, have a good night and see you guys tomorrow. Bye-bye.